CNBC TV18, embarking on a quarter century of excellence.
Out of the pan and into the fire, or between a rock and a hard place. We can take our pick of phrases to describe the situation that Indian startups have found themselves in 2023. Now, if 2022 was all about the fears of the funding winter setting in, this year has been about the survival of the fittest. Funding for Indian startups has slumped to a 5-year low in 2023, over a 70% drop down. The IC reached to about $7 billion as compared to $25 billion in 2022, this as per data from Traction. In fact, Q3 of 2023 was also the worst that we've seen in 5 years. Now, through the year, the froth of the last few years came bubbling up, bringing the impurities to the surface. Lapses in corporate governance, financial misreporting and irregularities, talk of internal audits and markdowns in valuations and slump in sales. Add to it a regulatory crackdown, especially in online gaming and digital lending. The freezing over was nearly complete, but as those hacking health for longevity will tell you, ice baths or cold showers help fight infection and boost immunity, and the ice seems to be thawing. Early November, Mamaearth went public, the first unicorn to do so in 18 months, and marked positive response from its early investors. We also celebrated a decade of the mega e-commerce festive season sales with record GMVs. And to the street's relief, listed new age tech companies have hunkered down and demonstrated a turnaround and have delivered on profitability, so have several unicorns. As we step into 2024, there is hope that we will send more startups to the Dalal Street. Ola Electric, Oyo, Pine Labs and Swiggy are set to be readying their papers. Not just that, over $20 billion worth of venture capital dry powder that was raised over the last 2 years is ripe for investment. And last but not the least, in the age of future technologies, we're likely to see continued interest in AI, deep tech, space tech and climate tech, with smaller, more focused VC firms entering the investment landscape. Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. Joining me today for this special show, two gentlemen who've been the most active investors in 2023 and have also mentored young entrepreneurs as they build resilient businesses. Rajan Anandan, Managing Partner at Peak 15, and Nitin Kamath, Founder and CEO of Zerodha and Rain Matter. Gentlemen, appreciate you joining us here on Young Turks, and thanks very much for your time. Rajan, let me start by talking to you about how you would sum up and describe 2023, not just for the startup ecosystem, but even for you, because it saw the birth of Peak 15 separating from Sequoia. How would you sum up 2023?
You know, I think, Shireen, 2023 has been a terrific year of transition. Right? It's been a year of transition into profitability. It's been a year of transition into IPOs that are actually well priced. And for us, it's been a transition from Sequoia Capital India and Southeast Asia to Peak 15. So it's been a year of transition. And I must say, as we sit here in December, ending the year, it's a year that we feel very good about. And I think in your summary, I got a little worried looking at the first 4 or 5 statements about 2023, but towards the second half of it, I felt that was actually accurately representing, I think, a good balanced year in terms of the good things that have been happening.
Absolutely. It has been a mixed bag, and there is plenty to be hopeful of and feel optimistic about as well. But Nitin, how would you sum up 2023? It's a year of transition for Rajan, of course, on what happened with Sequoia and their move towards Peak 15, but also to his point on the move towards profitability, as well as a move to better priced IPOs. 2023 for you, Nitin.
Yeah, I mean, exactly what you just said. So, because one of the concerns that we've had was that, which is it seemed like a bubble at some point, and that has like we were wondering how bad it could be if that bubble burst, but it isn't as bad as what it potentially could have been. As in, it's awesome to see so many so many of these businesses on the path to profitability. And while we are in a spot right now with the new money not really coming in at the same tick as it was some time back, but I think that'll correct. And it'll be back up given the success of the recent IPOs And and the fact that there is an opportunity to come list on the exchanges, which I think people didn't factor in a few years back, that that Indian tech startups can actually list on Indian markets and raise money so easily.
So it's been better than what was expected. 2023 didn't turn out to be as bad as one feared. That's Nitin Kamat's take on the year gone by. But Rajan, let me come back to you and pick up on what we heard there from Nitin, that there are plenty of opportunities that should excite investors like yourself. Now, when we spoke, which was a couple of months ago, you talked about the dry powder, not just Peak 15 is sitting on, but a lot of VC funds at this point in time are sitting on. Now, the funding winter we've spoken enough on and enough about. Is spring in the air?
So I think, Shireen, if you look at this year, right, if you look at the venture capital industry, there's sort of three broad stages, right, in the private markets. There's a seed stage market, so you're just starting up, you're raising, whether it's 3 crores or 5 crores or 10 crores or 15 crores, that's a seed stage market. Then there's a venture market, so you're raising, call it 30 to maybe 80 crores or something like that. Then there's a growth market, which is you're raising over 100 crores. I think what we've seen this year is the seed market is very active, Shireen, right? So, you and I chatted about the most recent cohort of Surge that we launched. It's really never been a better, more vibrant period for the ecosystem in India, and we can talk about that. And across all firms, I think we are very active at seed stage, which are new companies that are up and running, right? And then if you go to the next stage, which is call it the venture market, especially the Series A market, that's also quite active. It's not as active as it used to be, but it's actually quite active. Where we've seen the slowness is really in the growth market, right? So companies raising, call it above 15 million, 20 million, and certainly the 50 to 100 million rounds, those have been slow. And the reason they have been slower is for two reasons, right? One, I think the best companies in India raised an enormous amount of capital in 2021 and early 2022. So they still have, lots and lots of runway. And actually, almost all of them are now either profitable or rapidly getting profitable. So one could argue that they may never raise again, right? The next time they raise may actually when they go public. So that's one. And second, the best companies raised a lot of capital, but they also raised at 2021 valuations, right? And today, growth investors across all firms are really looking for very high quality companies that they can invest in at quote unquote, what are today's 2022 prices, right? And those companies have been far and few in between. So as we look at this year, I think it's important to look at it in this lens. Seed, very active, back to normal. The venture market, Series A market, reasonably active. I think next year we'll see it getting back to normal. The growth market, which has been really where it's been slow, we think that's going to pick up steam, but it really will depend on, high quality companies that come to market to fundraise at what next year will be at 2024 prices. So we think actually the market is a lot more active than because when you look at a headline number like 7 billion, those billions are normally driven, Shireen, by large late stage financings, right? And that's actually where you've seen a lot of the slowdown. Whereas if you look at the early stage seed market, it's actually very active today.
No, you're absolutely right. And thank you very much for adding the nuance to the headlines there, Rajan. And I agree with you that it has been an active year, particularly on the seed front. And Nitin, that's what I want to address with you as well, because 2023 has actually turned out to be the most active year for Rainmatter as well. So what's been exciting for you at this point in time? Over the last 7 years, you've invested over 450 crores across 80 different startups. As you look at your portfolio today, what excites you, and more importantly, what's going to drive the next set of investments?
Right. See, for us, the way we think about this investing is like an extension of what we're doing as a business. So it started in 2016 saying we need to partner with startups who are helping Indians do better with money. And all the moonshots that we are not taking as their own, we wanted to kind of partner startups and to collaborate and do it. And so anyone helping in terms of anyone helping do better with money, and then then the question was, is wealth just about money? The thing was maybe not. It's also health. And then we said we also need to kind of partner, collaborate with startups which are making it easier for people to make healthier choices. And then when they talk about health, you can't, be in a place where the planet is not healthy. So anyone working on climate, and then yeah, so I think we need more entrepreneurs in this country. That's really like a large problem to solve, and that can happen only when there are good storytellers. So that extended into storytelling as well. So I think what is exciting this year is that I think all the expectations that founders set when they start businesses or when they raise money, I mean, that's come back to normal. And the problem, I think one of the big problems I had the industry was setting up unrealistic expectations, because when you set that unrealistic expectation while raising money, you kind of chase the wrong goals, and then you do a bunch of random things to get to those goals. So I think that has corrected, which is very exciting. Like I don't have people coming to me and saying, what, Nitin, there are 50 crore Indians who can invest in the capital markets anymore, which is happening in 2021, 22. Yeah, so I think that just the correction in that expectation, I think holds good for the entire industry.
And that's an important point that you make, and sometimes we don't appreciate this enough. And I want to delve a little deeper into this with both you as well as Rajan. Both of you talked about 2024 prices, and 2024 prices really reflecting the reality on the ground, reflecting, the change metrics in terms of expectations as well. Nitin, I'll start by talking to you. Whether we talk about climate tech, we talk about space tech, we talk about e-commerce or SaaS or fintech, with the current environment, with the regulatory changes that are happening, with the opportunity set that presents itself, I mean, what are the realistic metrics that we should consider at this point in time?
Yeah, no, I think this whole financialization of the country is like a big theme. I mean, we're seeing that happen like rapidly. So I think the challenge has been in finding different monetization models around this. So for example, for the population of the country, we just have, I think, 1,000+ advisors. Like as a country, I think we need like a lot more advisors if you want to help people do better with the money. So I think in finance, for example, around investment tech, if you could call this, what we're excited about is to figure ways to associate. You have 10 crore Indians who open Demat accounts, but what do they do then next with it, right? Because you let them on their own, they'll probably make mistakes, right? So you need platforms and people out there who can help them do better with money, and I think that's a really large opportunity, especially given where we are on the account aggregator framework, right? Because historically, the big challenge when you want to advise someone on money is, as soon as you ask the person a bunch of questions around his net worth, where his assets are, etc. This fellow would not answer. And if the person doesn't answer, how do you advise someone? Right? So now that you can do all of that with a click of a button with the account aggregator framework, so I think like a really large opportunity opens up there. On the health side, where I think this is again like a trend that we are seeing, which is people are getting more health conscious, and I think. As realization kicks in that life expectancy is only going to go up with medical progress. So one of the larger themes that we have here is that people will start caring about their health, both physical and mental. So we are doing a bunch of things around that. And I personally believe the first trillionaire on this planet will come from someone who's solving for climate problems. So, because, like what we've seen with COVID, right? When push comes to shove, humanity will make like large changes. And so yeah, with climate, there is no doubt, as in climate change is affecting humanity at a fast tick. And I think one of these years, we will all have to make drastic changes, and people who are solving for climate problems, I think will be able to stand out. So I mean, these are the three themes on which how we're thinking, and where the opportunity lies is what I think.
The first trillionaire could come from the climate tech space. That's Nitin Kamat's forecast here on Young Turks. Rajan, let me come back to you. And I like the investment tech cohort that you spoke of as well. I don't know whether the 12 crore Demat accounts will eventually, what that number is that you're working with on what kind of growth we can expect over the next 5 years, but we'll certainly be watching that space very closely as well. But Rajan, to you, what are the realistic expectations? Online gaming, for instance, everybody said this is going to be the next big thing out of India and so on and so forth. And look where we are today, at an impasse where the industry finds itself staring at an existential crisis, largely on account of the regulatory changes. And that seems to be happening across different sectors, digital lending with the RBI changing the rules. A little bit of the opportunity expected is being reined in there as well. So given the regulatory risks as well as the past divergence we've seen between market size and monetization, what should the realistic expectations be?
So Shireen, I think, first of all, by the way, I'll comment on the regulatory landscape in a minute. But I think if you take a step back, Shireen, India has a twin engine innovation ecosystem. Okay, one engine is innovating for India. And what we are seeing there is an acceleration across every sector, right? You saw Mamaearth going public. Today, there are over 1,000 new consumer brands just in our portfolio at Peak 15 and Surge. We have, close to 20 brands now that cut across beauty, beauty and personal care, food, et cetera, et cetera. And that's just one part of it, right? You can look at travel, you can look at healthcare, you can look at education. Nitin talked about financial services, which is a very, very large opportunity, and so on, including climate. So that's sort of innovating for India. I think the second India's innovation engine is really innovating for the world. So instead of innovating for the $3.5 trillion Indian economy, right? Indian entrepreneurs are now innovating for the $100 trillion global economy, right? So let me start with that second leg, because last year, 40% of new seed-funded companies in India were building for the world from day zero. And this year, at the end of December, we'll have the final number. This year, that number is over 40%, right? So I don't know whether we'll get to 50% or not, but certainly over 40% of new seed-funded companies in India are building for the world from day zero. And the number one theme there is AI, right? So if you look at venture capital and startups around the world, the number one theme in the world has been AI. And I think we are very, very encouraged, Shireen, to see the caliber and the quality of the AI startups that are, beginning to be built in India, right? So I think last week, Sarvam announced their funding round, which included both the seed round that we co-led with Lightspeed, as well as the new round where Khosla Ventures came in, right? Their mission really is to build a population scale AI platform for India. But once that happens, as you know, it doesn't stop there, right? But across AI tooling and infrastructure, across, vertical AI applications, across AI first business applications, as well as foundational models. So that's actually an area, right? And what we think is going to happen, what we are beginning to see on the ground, Shireen, is the AI movement in India is just picking up steam. So as we go into 2024, we're going to see many more interesting sort of AI companies. So that's sort of one big theme. I think the second theme really is around sort of what we call deep tech that goes beyond AI, right? And I put it into three big buckets. First is semiconductors. So as Peak 15, we have our first two semiconductor investments in India. They are in a current cohort of Surge, company called Inco and another one called Mindgrove. We think semiconductors is going to be a really big deal, and especially around RISC-V. India is going to lead the world in RISC-V, right? And I think India has about $30 billion worth of semiconductor consumption, Shireen. And our view is at least half of that is up for grabs to RISC-V, right? And when it comes to RISC-V, there's a reason Indian fabless design companies will win. So semiconductors is a big deal. The next one really is the energy transition. The session that was on CNBC just before us was all about, I think, was out of COP28. We've seen electric vehicles in our current cohort of Surge. We have a green hydrogen electrolyzer company called Nutrace. You'll see many sort of climate-focused companies. Nitin's very focused on that. And the third one really is advanced manufacturing, right? We think this manufacturing boom that we're seeing, both manufacturing in India but manufacturing for the world, is just beginning. And what we are seeing now, Shireen, is companies that are truly innovating, right? It's just not about cost, it's not about access, it's about fundamental innovation. So in our current quarter Surge, we have a company called Ethereal Machines that makes their own 5-axis CNC machines. And instead of selling the machines, they actually do manufacturing as a service for advanced, high precision components. So we spend a lot of time talking about innovating for India across financial services, consumer, gaming, travel, etc. But I think it's important to say that either this year or next year, we're going to tip over where Indian entrepreneurs from day zero are going to innovate for the world. So I think that basically makes this a perennial ecosystem, right? Because at any given point in time, when you're looking at $100 trillion global economy that you're innovating for, small bumps in the road, don't impact. So that's that. But coming back to the innovating for India, that engine, right, which is innovating for India, what you'll see, I think, is there will be some momentary hiccups, whether it's in gaming or whether it's in some of the financial services segments. But there's no doubt in the world. So Shireen, it's important that we keep in mind that today India has the most advanced digital payments ecosystem in the world, right? There's nobody in the world that would argue that we have the world's best fintech companies, okay? Whether it's Nitin at Zerodha, whether it's any of the other, payments companies, whether even in some spaces like InsurTech. And that is only going to accelerate, right? The revolution that we saw in payments is now beginning to happen in lending, and then will happen in InsurTech and so on and so forth. Now, the reason that we actually have a very robust financial services ecosystem is a very, very thorough and smart regulator. Okay, so actually the way we look at this is, yes, there are some hiccups along the way, but net, if you look at sort of a 2, 3, 4, 5, 10-year horizon, right, having a well-regulated ecosystem actually, leads to positive things. So Shireen, we can't be more bullish. We're more bullish than we've ever been. You see it actually not in what we say, but in the kind of companies that we invest in. And what we're seeing now is sort of an unprecedented level of innovation. And a lot of it now is IP-driven innovation that India's never seen before.
Rajan, before I get Nitin to comment on that, since you said that you've never been as bullish as you are today, what is that going to mean in terms of the number of checks that you intend to write out in 2024? What's the expectation? As part of Surge, you've already invested in 25 startups that are focused on AI. What's the visibility on the back of the conversations that you've been having so far on what 2024 holds, the promise it holds?
Fortunately, we don't have quotas on how many companies we're going to invest in or the amount of capital we're going to deploy, okay? We have 20,000 crores of dry powder as peak 15, and we will invest in extraordinary founders who are trying to build very large businesses, right? And we will invest in them at very early stages, which is, where Surge comes in. We will invest in them, once they've got to PMF, which is our venture business, as well as at growth stages, right? A company that's got PMF, that's got terrific traction, that's got great unit economics. So I think, what entrepreneurs in India should know is our ecosystem has never had this much dry powder. You just had $20 billion up, on the screen, right? That is 1.6 lakh crore, right, of capital that is waiting to be invested in startups. But I think it's important, Shireen, for entrepreneurs to understand the bar for quality that they need to have, right? If it's a pre-launch company, what do investors look for? If they're trying to raise a Series A, you have to have product market fit. And if you're looking to raise a growth round, you have to have very strong unit economics, and you have to be reasonably priced. So the way that I look at it, so I'm not answering your question because we honestly don't begin the year saying we're going to make this many investments. We will invest in the best founders who are building the most interesting companies, and we'll do it across stages, from seed to venture through growth.
Well, that's directionally, clear guidance that's come in there from Rajan. So, Nitin, let me ask you two questions to Rajan's point there on the inflection point, the tipping over, so to speak, in the next 12 to 24 months on Indian founders being able to create companies and products that are truly made for the world. Your thesis on that aspiration, and secondly, on the twin engines that Rajan spoke about, innovating for India as well as innovating for the world. Within the bets that you're making, and you're sitting on 1,000 crores of dry powder as well, where do you intend to spend what on?
Yeah, I would see the what we are chasing is a little different, as in, so we are kind of mostly chasing founders who are building for India, because we're not, like I said, right, as in the overall theme is help Indians do better with money, help Indians do better with health, and help climate in India. So while what Rajan is saying is absolutely true, but that's not really what we are kind of focusing on. We are focusing for Indians building for India, and but Rajan is absolutely right. The quality of the founders today is just, I mean, over the last 2-3 years, it's just improved significantly. I mean, products across the board, not just in financial services, but across the board. Even in some of the health startups that we are, we partnered, the quality of products is awesome. I mean, and I don't see why they can't scale internationally if they started focusing on it. And yeah, so but coming back to your question, we are mostly thinking of India as such.
Okay, you're looking at companies that are focused on the Indian market. I started by asking Rajan about the transition that they've seen from Sequoia to Peak 15. Let me ask you about what's happening on your front, Nitin. There's a lot of talk around a payment bank license. Is that on the anvil? Is that on the cards?
See, the thing is, one of the pieces which is broken in our business is really is the fact that our customer can't use the money funds lying with us for payments, right? And there are regulations today that require us to send money back to the customer, once every 30 days. So it is kind of a broken experience. If we could solve for it, we would love to attempt it, but getting a banking license in India is probably the hardest thing to do. So and we don't have lending ambitions. So I mean, it's something that we're thinking about, saying what's the right way to go about this. Yeah, but if coming back to your question, if a payment bank license was available on tap, I think we would have applied for it.
You would apply for it. Well, it is available on tap. I mean, you can exercise that route and that option, Nitin. But let me end then by asking both of you. Rajan, I'll ask you, 2024, the year of IPOs, in light of the experience that we've seen with Paytm, Zomato, and of course now Mamaearth, you believe that there is more reasonable expectation in terms of how IPOs should be priced, and hence, a better listing expected?
Yeah, absolutely, Shireen. Look, I think two things are very clear, right? One, to list in the Indian exchange, you have to be profitable. We sort of tell our early stage founders that it used to be, if you're a startup, you focus on getting to $100 million of net revenue. I think that's still important, but the more important number is at least 100 crores of EBITDA, right? So if you can get to that, you have a possibility of going public. You don't have to get to that if you're, a company like IdeaForge, but for many others, at least 100 crores of EBITDA, ideally 200 or 300 crores of EBITDA. So I think that's become very clear. The other thing that has become very clear is that you have to be reasonably priced, right? You have to be fairly priced, I should say, right? You've got to price your IPO fairly. And I think what we're seeing, Shireen, is a very, very strong pipeline of companies. You had a couple of names on the screen there as we started. But the reality is, if you look at the 100+ unicorns in India, already easily 40% of them are profitable, which means that more will get profitable over the next year. But at least half of those sets of companies have now easily crossed that threshold of 200 crores of EBITDA. So starting 2024, in many ways, I think Mamaearth has sort of started this new wave of IPOs, and I think these companies, number one, will be profitable, and I think number two will be fairly priced. So I think start 2024, 2025 and beyond, we're going to see sort of a very, very different era in terms of startups from India going public on the Indian exchanges.
Nitin, let me end by asking you, of the unicorns that are potentially looking at a listing, or maybe a couple of years away from a listing, which are the ones that excite you, the ones that you have the most confidence on? And of course, they're not part of your portfolio, but just within the ecosystem, your thoughts on the ones that stand out for you?
I mean, the ones that you just mentioned, Swiggy, Ola, Pine Labs, I mean, all of them actually I actually use Swiggy quite a bit, so I mean, it'd be nice to have them list. And also, IPOs act as a way to broaden the capital market participation stuff. So the kind of brands, the more popular brands come list on the market. It also in a way helps expand the capital market ecosystem as well. So excited to see all of them. I mean, if I had to name one, I think I'd say Swiggy, just because the number of people out there who use Swiggy and Ola, of course. So Swiggy and Ola would probably be my top two, wishes in terms of them listing early on the markets.
Well, those are the ones that potentially, I mean, the buzz is that Ola could be filing its DRHP in the next few days. We will find out soon enough. But Rajan Anandan and Nitin Kamath, thank you so much for joining us here with a very insightful conversation on the year that's gone by, but more importantly, the lens that we should use to look at 2024 and beyond. What excites you, the themes that you're watching out for, and the stories that you will be telling your peers and, of course, the stories that we should look out for here in India. Appreciate your time and thanks very much. Here's wishing the two of you a very happy new year in advance. With that, it is time for us to wrap up this edition of Young Turks. From all of us here on the program, many thanks for watching.
CNBC TV 18, embarking on a quarter century of excellence.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.